people's propensity to borrow. So that's not really obviously the case at the moment. And then, I mean, to your point, we can all look, people like me can look at these big data and sort of say, oh, it doesn't look as if the consumer sector is particularly challenged and particularly imbalanced. And yet the median consumer, the greater number, quite of them are quite pinched already. And that doesn't really show up in the data in quite the same way. But if you look at that broad data, it does suggest that the consumer is actually not in a bad place, and wage inflation is the key here. And I think one of the things we've seen on both sides of the Atlantic through a shift in the political agenda, is that they need to get wage inflation, push it down to the median worker, the average worker who has not seen wage inflation for quite a while. The gig economy comes into all of this, flexible working, everything else.
Less profits, less margins.
It's not good for margins. It does put pressure on margins, but it does add to wider demand in the economy. So I think there's an offset there.
All right, we'll pick this conversation up after the break. Chris Riley stays with us. We're a couple minutes away from the European market open, where it looks like we're in for a negative start to trade. Stay with Squawk Box.
Everyone on the show is a professional trader. We put our money where our mouth is.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore, and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way, and give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Fancy throwing something different on your barbecue this summer? At Asda, a pack of 2 cod fillets at only £3.19. And a 4-pack of Grower Selection sweet corn cobbets at just £1. Bring it home with Asda. Save money, live better. Selected stores online, subject to availability. Card 260 grams.
Pretty safe to say that politics are front and center today here in Europe. We've got developments in Italy, developments here in the UK. So a lot for investors to digest and sift through. Yesterday, market reaction relatively muted to these developments. And it perhaps is suggesting that the market was already well prepared for these outcomes. So we will be sussing out as the day progresses what this continues to mean for markets. On the Brexit front, we of course had Boris Johnson suspend Parliament yesterday. And now the next question is, how how the opposition responds as they return next week. Then in Italy, of course, a coalition coming together between PD and 5 Star, sidelining Salvini for now. And Giuseppe Conte is due to meet with the president of Italy later this morning. So that's a bit of a progress there on the Italian political front. Now, in terms of what this means for stocks, the Stock 600 opening up lower, down about 0.17%. Yesterday, the main benchmark ended about 0.2% lower. So building on those losses, there was a lot of divergence yesterday among the different regions in Europe, with the FTSE 100 outperforming the broader market, and that came alongside a move lower in the pound on the back of those Brexit developments. So the sterling stabilizing somewhat today. We'll take a look at markets in just a moment, but first let's get to sectors. Autos at the bottom of the board, right alongside basic resources and oil and gas. Those are down about 0.6, 0.7%. Now moving along, travel, leisure, and retail down at the bottom as well. In the middle, we've got financials, technology, banks, household goods. And now moving toward the top, of fairly muted moves overall. The best performer of the bunch, construction, up less than a 0.1%. So very, very muted moves at the top of the board relative to what we're seeing at the bottom. So a bit of a negative slant to trade, certainly this morning for European markets. Let's get into the different regions. As I mentioned there, FTSE 100 yesterday gained, outperforming the broader European space, but that came on the back of what happened in sterling. Now this morning, a muted start, down about 0.06%, and that, of course, comes alongside some stabilization in sterling. In Italy, the FTSE MIB a touch light this morning, again, just below the flat line. The DAX just opening about 0.33% lower, but overall, we're looking at negative moves for European markets. And this follows a relatively positive day stateside yesterday, more mixed moves in Asia. Let's get right to Italy. One of the top stories of the morning. Here is a look at the key stocks in the FTSE MIB. A fairly mixed picture, as you can see here. And let me just give you a bit more detail on what we saw on the political front over the last 24 hours. Italy has moved closer to a new government after the 5 Star Movement and Democratic Party agreed to form a coalition. Following days of talks, leaders of the two parties said they would work together for the good of the country, with the PD backing 5 Star's choice of Giuseppe Conte as prime minister. And now, as I mentioned, the prime minister, or the former Giuseppe Conte, will be meeting with the president of Italy later this morning. Shifting gears, let's take a look at UK stocks. The Queen has approved Prime Minister Boris Johnson's decision to suspend Parliament in the week beginning September 9th. That means pro-EU lawmakers have less time to try and thwart a no-deal Brexit. The Prime Minister has denied that this was his intention. Now, in terms of reaction, a fairly mixed picture here. Of course, we typically do see divergence among the exporters, the big multinationals in the UK, and the domestic names, given the weaker sterling is a benefit for those exporters. Now this morning, we're seeing a bit of a mixed picture here. Diageo and Unilever showing mixed signs here in terms of the oil majors, BP and Royal Dutch Shell trading a touch light. Fairly mixed picture for the financials as well. Let's move on and take a look at UK home builders. As I mentioned there, that difference between domestic and international companies here in the UK is an important one to bear in mind. Here's a look at the domestic names. These are the home builders in the UK. An overall negative slant this morning. But again, interesting to see that the market reaction fairly muted. Let's take a look at UK airlines next and see what that picture looks like. Ryanair outperforming the bunch, up about 1.1% this morning. EasyJet and IAG down this morning. So fairly mixed picture when it comes to UK and Italian stocks this morning. Jeff.
Terrific, Juliana. Thank you very much indeed for that. Welcome back to the program, an old friend, Yogi Duan, CEO and founding partner of Hassium Asset Management. Yogi, very good morning to you. Reminder, Chris Wiley is here as our guest host this morning. The line that intrigued me as I looked through your notes this morning was looking for a UK entry point with political risk / Brexit risk. We've been holding Chris's feet to the fire this morning and trying to get him to give us a sense of when is a good time to recommit to UK assets, because I think a lot of the international investing community is quite frankly just confused about what's going on here in the UK and trying to figure out when the appropriate time to re-entry UK assets may be. King Solomon, in his wisdom, I think, said, "This too shall pass." And that's where Brexit will go ultimately. So for medium to longer term investors with an eye to an opportunity of current mispricing, when do you think is the right time to re-enter UK assets? How much cheaper does the FTSE 100 have to get before international investors begin putting significant chunks of money into this market?
Yeah, it's a good question. Look, the UK is still up 9% year to date, so let's keep this in context. The UK is still growing at 1.4% on a GDP basis. You've got inflation at just over 2%. You've got unemployment at 3.9%. The UK is actually in quite good shape. There's a lot of political uncertainty to the extent where it's almost getting boring. And we've looked at sterling very, very carefully as a barometer as to whether things are going well or not going so well. Yesterday's news was really intriguing. You saw sterling still off, but then it came all the way back up to the 122 level. And remember, sterling's still 16% undervalued on a PPP basis. So bottom line here is that we think the UK economy is fine. We think that there is a very negative sentiment around Brexit. The impact is having a profound impact on how investors are looking at investing in the UK on a medium to long-term basis. Our view is to just buy on the dip. And we actually think there's no definite get to this level and invest. We actually think phase in investments over a 2 to 3 month period. We think a lot of the bad news is already priced in, and the UK economy is actually in okay shape despite what's going on with Brexit.
Come on. Here we see someone who's stepping up and their pound cost averaging into the FTSE. Chris, why are you still reluctant?
Well, I think what I said, Jeff, was that actually we'd gone from a position of being very underweight the UK in the immediate aftermath of the Brexit to actually increasing our exposure to UK equities now. And that's where we are, actually. We see preconditions in terms of valuation. You know, I mentioned the yield, you're getting paid to wait. I said at this stage we're favouring more the large companies through the FTSE than the domestic, because I think the domestic is still unclear. But I'll put something to you, if I may, which is a dilemma we've been wrestling with, which is that if you do want to get bullish about the UK, it also has bullish implications for the pound. And of course, that has an inverse correlation, particularly with the index at large, because of the large proportion of overseas earnings. So just as we saw a big devaluation boost to the index in the aftermath of the Brexit vote, if we get more positivity about the UK economy, the pound will go up, but that would actually be negative for the index because of the FX translation.
Yeah, the impact on currencies is a really important one, and the point you make is a good one. We actually think that the sterling value, fair value, should be much higher than it currently is. We actually think that post-Brexit, post-October the 31st, which we believe will happen, and we've been talking about it happening for quite some time, will lead to strengthening in sterling, which could impact on earnings numbers in the way that you suggest. But we actually think that there is so much negative sentiment. It's an export-led recessionary sentiment that's not backed up by fundamentals. We actually think that as soon as you get to the 31st of October, a lot of the uncertainty will be removed. You'll start to see a relief rally in UK equities. You'll probably see sterling strengthen marginally based on current levels. And that uncertainty is slowly being removed from the marketplace. Like you, we've been at zero exposure in the UK. We increased it at the beginning of the year to an underweight position. We're still underweight. We're looking to get to neutral levels, and we're just looking for a good entry point. Getting domestic exposure is near on impossible because you have to go into the small cap, mid cap space, so you have to really focus on the large cap space. And of course, that's very sensitive to sterling and those levels. We're more optimistic than the market, and we actually think that there will be good entry points, if not today, over the next 2 to 3 months with all that's going on.
So you paint a fairly rosy picture of life post October 31st, even, assuming we come out of the EU at that date. How much of this is predicated on more fiscal spending coming from the government?
Yeah, really good question. Growth has to be financed. It's not a freebie. And it's financed in two ways. Bank lending, which hasn't been amazing, and fiscal spending. The fiscal spending plan that the Conservative government put in is key to growth in the UK. But remember, we're still growing at 1.4%. Now, you've said I've painted a rosy picture. I just think we're just more positive than the market. We're not rosy in terms of things are going to be great come the 31st of October. There is a lot of pain still to come. There is a lot of volatility, but we're long-term investors. We invest based on fundamentals, and the long-term picture in our view is more positive than we currently are today.
Well, coming back to sterling, because it's obviously such a huge driver of the view that markets more broadly take. A lot of people have come on this show and suggested that a no deal is priced into the pound. All the negatives are really priced in at this point. Is Is a unity government or even a Labour government priced into the pound at this stage?
I don't believe it is. I think that the base case scenario here is that you will have a Conservative government in power post the 31st. I think a no-deal Brexit has been priced in for quite some time, and that was evident yesterday when you saw the announcement that was made about closing the government. Sterling weakened, then bounced back up to 122. Key thing to remember here is sterling is massively undervalued, 16 to 17% undervalued on a PPP basis. It has only one direction to go. Granted, there will be a lot of volatility short term.
When we look at what you currently like at the moment, overweight investment grade, overweight Japan, overweight China, overweight the United States, some of that I think would be consensus right now. China looks tricky. Why are you happy to stay engaged in China, even as we're in the white heat of a debate about which way sanctions on trade are going to go?
So the sentiment is so negative towards China, but yet it's still up 19% year to date, which is exceptional. Forward PEs are hovering around 11. There's a lot of uncertainty around what's going on in Hong Kong, but the big issue is obviously the trade rhetoric between Trump and China. So much negativity is already priced in and the markets are still doing well. It leads us to one conclusion, which is the China story is a domestic growth story. You've got GDP at 13 trillion. It's the second biggest economy in the world after the US at 20 trillion. It's still growing at 6% when you look at GDP forecasts. There is a massive fiscal spending plan in place, and you've got a currency that's actually weakened, which tends to help exporters. We believe that both parties, both the US and the China, actually want to see a resolution to the trade dispute that's going on. As we see that happen, sentiment will change, and we actually be both the US and both the China will be at levels higher than they currently are today.
In terms of the Chinese retail environment, we've heard from a number of companies that the Chinese retailers actually in pretty good shape, that domestic sales have been pretty decent relative to what we've seen in other parts of the world. I mean, if you layer that on top of some of the more, national pride sort of drivers that we've seen among China consumers, that, amid this trade war, we're seeing the likes of Huawei gain market share. And part of that many attribute to Chinese consumers wanting to buy more Chinese-made products. So is Chinese retail that's exposed to the domestic Chinese consumer the place to be?
Definitely. We think that's a very positive domestic story. And remember, going back to the issue, growth has to be financed. And it's financed in two ways: bank lending, and the Chinese government are doing a lot to promote bank lending, and also fiscal spending. And the Chinese government are spending lots of money, particularly in the area of infrastructure. This all spills through to the consumer, who are likely to continue spending going forward. Very positive environment in China if you can just live through the short-term pain that's currently going on.
How do you feel about China, Chris, at the moment?
Yeah, I think it's an interesting area. I would say, there's been a strong bounce back this year, but after a very, very weak period last year. So looking at the trend, it's not entirely clear that we've had an inflection point in China. But having said that, I think there are some quite big opportunities. There's no doubt that sentiment is very negative. And I think there's also, what's the downside here? If things do get worse, what will happen? And I think the answer is you'll get a big fiscal boost from China, from the Chinese authorities. I think they'll chuck the kitchen sink at it, not least because it's a matter of national pride at the moment. And you could see that actually coming across the world. I think that could be one of those big stories over the next couple of years. Maybe Britain will go first if we have a hard Brexit and really loosen the purse strings. And you can see the movements in that direction in the US, and you can see a case for it in China. And that could be the thing which finally turns sentiment around in terms of this very, very gloomy expectation for global growth at the moment. And if that is the case, then I think China will be right at the center of that. So it's definitely primed. We're also interested in this story behind the fact that Chinese A shares are gradually being included in world indices for the first time. So there's a natural buyer of Chinese equities. So it's very much something which we're keeping an eye on. And actually we are starting to, we are warming up to that.
Okay. Juliana, let's keep in touch with the market open. How are we doing?
Let's check on some of the corporate stories in focus today. Bouygues reported a 36% jump in first half current operating profit, beating expectations. Strong performance at the French company's telecoms and TV units helped offset weakness at its construction businesses. The group also backed its full year guidance and says it expects to improve profitability in 2019. And you can see here Bouygues shares reacting well to this news, up about 4.7%. Switch on to Pernod Ricard. They have announced a €1 billion share buyback and a 30% dividend hike in the face of pressure from activist investor Elliott Management. The world's second biggest drinks maker also outlined new investments in the U.S. and China, its two biggest markets. The company posted an 8.7% rise in full-year underlying profit, slightly ahead of expectations, and Pernod's shares up about 0.6%, so a positive, albeit fairly muted response from investors. Recruiter Hayes saw full-year pre-tax profit fall as it booked a £15 million charge. The charge related to restructuring costs and pension plans. The UK company reported a 5% rise in full-year net fees, but warned of a tougher trading environment in Germany and the UK, and investors didn't like what they saw. Hayes shares down about 5.1%.
Thanks very much for that. Let's take the break. We'll be back in a moment. The Trump administration revisiting a plan for ultra-long bonds. We'll have more on the proposal when we come back. How's that worked out for Argentina? Maybe slightly better for Austria. What does it mean for the US? We'll talk about it.
Right now on CNBC Make It, when it comes to video games,
if it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
It's me, the Losers Club has officially begun.
They're back, and so is he.
We didn't stop it.
The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime, and the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day. At Gunwharf Quays, Waterfront Outlet Shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals. On computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
San Francisco Fed President Mary Daly is in favor of a hot economy. In a speech, Daly backed continued accommodative monetary policy, saying she wants to include, quote, as many workers as possible in the expansion. However, she did warn of the potential dangers from a hot economy, saying, quote, there is no free lunch. The San Francisco Fed president is not a voting member of the Federal Reserve this year, but supported the central bank's rate cut in July. The US Treasury Secretary Steven Mnuchin says he does not intend to intervene in currency markets at this time. In an interview with Bloomberg, Mr. Mnuchin did admit that the situation could change in the future. President Trump has argued the dollar's strength gives other countries an advantage in international trade. The Treasury Secretary also said the issuance of ultra-long government bonds is, quote, under very serious consideration. Let's go back to Yogi and Chris. If the US Treasury did start issuing 100-year paper, would you be in the market for some of that, Yogi?
No, that's way too far out for our investors and the way we look at the markets. If we want to take a view on durational interest rate risk, we go out as far as 10 years. We might go a little bit longer, but after that, the interest rate risk just becomes too unclear for us to take a sensible view.
How about you, Chris?
Yeah, it's the same view, really. Although I would say, it's a matter of, what you're getting. I mean, whether there's a level of compensation for taking that risk, and what we've seen in the last few years is the so-called term premium. What you get paid extra for fixing into a long-term interest rate has completely disappeared. So I think it makes good sense for the US government as sellers of this debt to look at this. Not a great equation for potential buyers, investors.
Yogi, we heard from President Trump again in the last 24 hours citing Germany's negative rates, and he's highlighting the fact that it's an advantage for them. The Fed should be putting the U.S. in a position that puts them on a level playing field with Europe. But I mean, it's not as if the German government is borrowing more to take advantage of rates being where they are. They're not spending more. As a result, the economy is stalling. So I mean, at this point, what's the benefit of having negative rates? And is President Trump, without getting political, I mean, is this a completely off-base sort of statement to make?
I think it is an off-base statement to make. I think Germany is contracting. It's contracting because of the trade war rhetoric. We see it short-term in nature, and as soon as you start to see conversations, discussions about a resolution to the trade dispute, you will see Germany actually improve. You'll see some GDP growth. You will start to see an economy that is flourishing. You remember, Germany's biggest trading partners are France, the UK, obviously you've got the US, and obviously you have China as well. All of them are under distress at the moment, but short-term in nature. We actually think Germany will actually improve in quite a meaningful way quite quickly over Q4, Q1 in the near future. So Trump's comments really don't make sense. He has an agenda which is to lower interest rates. If you lower interest rates, it might have an impact on the dollar, but it will be supportive for markets. It's a voting strategy because of the elections in November 20. The market knows and understands this.
Chris, what do you think about Germany at this stage? Does that outlook sound right to you, that we're going to actually see an improvement in the second half of this year?
Well, it comes back to this word we're using quite a lot at the moment is primed. When we look at the valuation case now for equities after this collapse in interest rates we've seen, we think the valuation case is primed. When you go down your checklist and say, present, one of the things which is present now is a valuation case for equities. And then we need growth. We need a growth impetus. I think that's the other thing. You look at that checklist as needing to be present. And for our lead indicators at the moment, it's been a big disappointment this year that has been absent. And when we look at that now, it's still absent. We don't see, in our lead indicators, an indication that is actually turning a corner yet. But it should be primed because of just where we are, and how gloomy the surveys have been. So in terms of the directionality, you would think that the only way is up. But for us, we would like to see from our leading indicators signs that actually is manifesting, and that's what's missing at the moment for us.
It feels as though you've made that sort of point with the UK and now with Germany that, given where markets are, there is an attractive value case to be made, but not necessarily a catalyst that's visible at this point. When you talk about leading indicators, what are you watching most closely before you can get into German equities?
Yeah, well, we have quite a big dashboard of them. They really split into two groups. I would say the first are the lead indicators, which is a mixture of survey evidence. These are things a lot of people watch. We look at it for indications of economic acceleration or deceleration. So things like new orders, where new orders sit relative to inventories. We also look at manufacturing surveys, all this sort of thing. So that's kind of leading indicator pack, and that's where they're still pretty dire for the most part. Then we look at things which are things that warn you of recession a bit more. So the first lot are really direction, and then the things which look at recession, and that has more to do with slower moving indicators such as the employment conditions, and those are still pretty positive, and we've not had any red lights going off there. So that's important. So when we look at this pricing of risk, of economic risk, which is really vectoring in on the States, because it's been the one beacon of hope in terms of growth over the last year or so, we can say, the momentum at the moment is not good in terms of the economic acceleration, deceleration, but we're not getting signs of that masticizing into a full-blown recession. And this is why the consumer is still spending in the States, because employment conditions are very buoyant, and it is finally translating into some reasonable wage inflation above rises in the cost of living. So that's really important. So we're suspended really between these two things, and that's why I think we're looking at markets which we've been pretty cautious about generally. I think we can see a case to be made. We still agree with the consensus that we don't think a recession in the US seems particularly likely unless employment conditions change. What we need is a bit of economic impetus, something you can hang your hat on and say, actually, we can see the light at the end of this tunnel, and that's what we're really waiting for.
Yogi, a lot of money's moved to defensive positions in gold and Japanese yen at this point, and has sought out secure dividend, which now looks quite expensive to find. How do you feel about those parts of the market, given that broadly I get the feel that you're willing to sit in equities for the long run?
Yeah, no, absolutely. The gold trade to us makes no sense whatsoever. We think it's dominated by fast money, lots of leverage, and masses of volatility. And you just have to look at what's happened over the last 20 years with gold. I don't think it has the safe haven status that everybody is talking about. The thing to remember with gold, and why we've seen this more recent rally, is that you've seen emerging markets, central banks starting to buy behind the curve. You've seen retail demand, again, behind the curve, all jumping into safe haven assets. That's also impacted on the yen, as you've quite rightly said, and you've seen the yen strengthen as a result because of uncertainty. But of course, the ultimate safe haven seems to be the US dollar again. And it's already ridiculously strong and is maintaining a very strong level on a PPP basis. We would like to see the dollar weaken short to medium term, and that will only change when you start to see sentiment improve and capital being reallocated to global equities.
Good to see you. Thanks very much for coming in. Yogi Duvan, the CEO and founding partner of Hassiam Asset Management. Chris, I think you own a bit of gold, don't you?
Yeah, so I was looking forward to the opportunity of having a chat about that.
We'll come back. You can sit on that for a moment, because I know there are a lot of people that do own gold out there at a retail level who are shouting at the television at the moment because they disagree with Yogi. So we'll give you a chance, I think, to put the case for gold in just a moment. Also, Italy. Do we have a new government yet? We are apparently inching closer to that, with perhaps an old face at the top. We'll take you back to Germana in Rome in just a moment.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall, British brand since 1903. Conditional sale, minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance, subject to status. 18 plus, small business users only. T's and C's apply. Search combo offer.
You did it. A-levels are finished, and now everyone's talking about what to do next. Sound familiar? If you're still deciding, look no further. Because sometimes a sunny day like today can mean a new perspective. So this morning, why not check out the courses available through Clearing at the Uni of Bedfordshire and see how you can make the most of their bursaries available for all students. Find out more online and call the Clearing hotline. University of Bedfordshire. Graduate as a professional.
Live big and spend less on the brands you adore and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way and give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
There's a lot of green on the wall this morning. European stocks have reversed early losses as China repeats it's willing to resolve the trade war with a, quote, calm attitude. The Queen has agreed to Boris Johnson's plan to suspend Parliament in September, raising the prospect of a no-deal Brexit on October the 31st. Sterling has recovered after falling to a 6-day low. Giuseppe Conte is due to meet with Italian President Sergio Mattarella, potentially ending the country's latest political crisis after the Democratic Party and Five Star agree to form a coalition. Bouygues shares jump, topping the CAC 40 as growth in the French group's telecoms and TV businesses helped deliver better than expected first half profit.
Well, it's been far from a dull open here in Europe. We're seeing stocks that reversed early losses. Now the Stoxx 600 trading about 0.5% higher. That comes after initially we saw a step lower after a mixed handover from Asia. Of course, political developments front and center in Europe, with Italy looking at like we're going to get that coalition government installed. Giuseppe Conte meeting with President Mattarella in just a few moments. Brexit, of course, front and center here in the UK after Boris Johnson moved to suspend Parliament yesterday. We got a bit of market reaction on that yesterday, but not a huge amount. Markets really taking it in stride, certainly when we look at sterling and the move that we saw there. Let's dig into the sectors, though, and see what's behind this move higher. I want to mention that the move comes right on the back of some comments from China's Commerce Ministry. They came out just after the market opened saying that essentially that they are looking to resolve matters with a calm attitude, and they oppose an escalation in the U.S.-China trade war. So some more positive rhetoric on that front, and that, of course, a big driver of what we are seeing in markets. So now the majority of sectors trading in the green. At one point, every sector was in the green. Now real estate and insurance just a touch below the flat line. Right at the top, we've got food and bev, construction, telecoms, and industrials. Let's dive into the single stock movers and see what's shaping out the top and the bottom. Right at the top, we've got Bouygues, as Jeff mentioned there in the headlines. They came out with a better than expected set of results, and that stock tops the Stoxx 600 up about 5%. And then in the bottom here, we've got some UK domestic names underperforming. Hammerson, Hayes, St. James Place, so more of a UK tilt when it comes to the underperformers this morning in the Stoxx 600. So that's the picture of markets about a half an hour into trade. Jeff.
Very shortly, we will bring up a shot of the Palazzo del Quirinale, which is where the presidential palace sits. Giuseppe Conte is due to make a statement after meeting with President Sergio Mattarella. Conte is expected to be offered a fresh mandate as Prime Minister after the Five Star and Democratic Party agreed to form a coalition. Germana is with us this morning from Rome. Germana, my question, I guess there are many questions about this, but where does Mr. Di Maio now sit in this unfolding story?
As ever, potentially another sticking point. As you mentioned, just moments ago, acting Prime Minister and Donald Trump's good friend, Giuseppe Conte, showed up in his motorcade to meet with President Mattarella. They will be having talks now where he's expected to formally be given the mandate to form a government. So that's what we know as far. The next steps, not necessarily so easy, because as you mentioned, we still have to go over the list of ministers that will be submitted for this potential government. A big question still, a sticking point, is what happens with Luigi Di Maio. Reports suggest that some people have been putting his name forward to be Deputy Prime Minister again. PD are pushing back and saying, look, we accepted your man, Mr. Conte, as Prime Minister. We're not going to accept for Luigi Di Maio to take on the Deputy Prime Minister role as well. So interesting to see the give and take and how those dynamics progress. As we've mentioned in the past, PD are also pushing for the Finance Ministry role as well as the Italian EU Commissioner role too. Two very, very important spots to have in the Italian government, given the state of the Italian public finances here. Plus, in addition to that, I should add there are further other little twists that we need to think about as well. Yesterday, the founder of the Five Star Movement, Beppe Grillo, said, look, instead of having a government formed of ministers, why don't we just put technocrats in? Not so sure PD lawmakers will be happy with that. In addition, Five Stars still need to put the potential coalition government to a vote by their own members on their open democracy platform system called Rousseau. The last time they did this with Lega, it went through with more than 90% approval from Five Star members. This time around, we have yet to see. There are a lot of unhappy people within the Five Star movement because traditionally this has been an anti-establishment party, allying themselves with a very established party in the shape of PD. And then let's not forget that Mr. Salvini, never one to be quiet, is still making a lot of noise from the sidelines here. Yesterday he said the consultations, look, if the only thing that unites these parties is their common hatred against Lega, what else can they offer to the Italian people? The time has come for snap elections. Whether it happens in 3 months, 6 months, 9 months, we're waiting on the sidelines and we're going to win eventually. One thing I would just say is markets have indeed been encouraged by the recent developments, and just taking it back to where we were, bond yields about more than a year ago actually, we've rallied 280 basis points on the Italian 10-year. So if you think about it from a market perspective, the fact that we have potentially a more European-friendly party coming into government could be perceived to be a positive. But I'm just going to leave you with one question. Are we rallying because of hopes of what this government can achieve, or because of hopes of what the ECB may end up buying in the future?
Well, Germana, that is indeed a great question, and we will discuss it more on the program. But I want to come back to specifically what's going on in Italy here. I know that you yesterday were at an event where Mr. Berlusconi was speaking. What's been the reaction from other parties to the developments over the last 24 hours?
That is a very interesting point as well. So actually, I was just looking at a comment from Mr. Renzi, and he posted this morning that institutions are winning and populism is dead. So 1 for political parties and 0 for populism. And if you think about it, the whole landscape of Italian politics has changed over the last couple of years with the emergence of the Five Star on the left and with the Lega party on the right. Both populist parties, I should add, even though Renzi is crucially forgetting that point when he's talking about populism being defeated today. But the real question about this is, what has happened to the center-right in Italy? And that traditionally has been the stronghold of the Forza Italia party, led by Mr. Berlusconi. So yes, he's 81, he's been around for a long time, but don't underestimate Mr. Berlusconi as well. He recently just got elected back in European Parliament at the European elections. And yesterday he said, look, the time is now for snap elections. He also wants snap elections, but my sources tell me that they're not so keen to partner up with Salvini and with Lega. They're trying to distance themselves away from the Lega party and present themselves as a modern centre-right political party in Italy and regain some of the trust that was lost to the electorate. And they lost obviously a lot of votes to the right and the far right. They're going to try to get those votes back. But again, Forza Italia is still only tracking around 7% in the polls. That's nothing compared to the other parties that we've talked about, all around 20%, and Lega in the lead around 34% now.
Terrific, Jemana. Thank you very much indeed for that. The decision by UK Prime Minister Boris Johnson to suspend Parliament has sparked fury among many lawmakers, with some calling the move a constitutional outrage. It'll now be more difficult for MPs to thwart a no-deal Brexit, apparently. Let's get out to Steve in Westminster with more on this.
Yeah, Jeff, absolutely. And as you say, this is democratic crisis, this outrage. It's been an outpouring from opposition MPs and commentators, but also from one or two people within the Conservative Party as well. And one of the most important people potentially going forward in the Conservative Party is Sir Ken Clarke. Now, he's the father of the House. He's been an MP of Rushcliffe in Nottinghamshire since 1970. He was a senior minister under Thatcher, under Major. He's been Chancellor of Exchequer, of course, and under Mr Cameron as well. And he's been talked about potentially as one, working with the opposition, Jeremy Corbyn, to try and form some form of caretaker government, and two, potentially as an outlier, becoming a caretaker prime minister himself. I managed to just catch up with him here in Westminster, and I started off by asking him what he thought of his own Conservative Party prime minister and about the actions that have just been taken.
It's absurd. He's just given in to the fanatic element of his followers. He's decided to go hell for leather. But it's, I share all the outrage which everybody's competing to express. I hope it'll bring together the sensible majority of Parliament who will find some alternative to this, not only debating it properly, but actually saving us from just crashing out with a no-deal Brexit, which he's only pursuing because he's sold out to the people he's surrounded himself with who appear to want it.
There are many alternatives. One of them would be a caretaker government led by either Jeremy Corbyn, and your name has been mentioned, sir. Would you serve in a caretaker government led by Jeremy Corbyn?
All this stuff about who would lead what, that's all daft footnotes. I mean, the media are entertaining people with all the outrage and the personalities. The key thing is to decide, are we leaving in a sensible way that doesn't do damage to our economy and keeps all our ties with Europe, all our business ties and all our trade flowing freely, or are we going to actually have a referendum and decide whether to leave at all? You can combine the two. I think Boris's absolutely outrageous sort of petty dictator stuff will bring together the rather slightly divided majority in the House of Commons, and they'll decide which of those two they're going to go for, or what the combination between the two should be.
And so brief, was that a no, sir? You wouldn't work in a Jeremy Corbyn caretaker government?
I would do anything necessary to stop this country creating the childishly disastrous mistake of crashing out with no deal.
Incredibly strong language there from Ken Clarke talking to CNBC just a couple of minutes ago. Let's get a view from Chris Whitehouse. He's a political consultant and Brexit advisor at the White House Consultancy. And just to level the playing field, you have voted Brexit originally in the 2016 vote, Chris. So just so our viewers know where you come from. Chris, you heard a few of the comments I was relating to you there from Ken Clarke. Sold out to the fanatics. It's absurd. I share the outrage. It's petty dictator stuff. Damage to the economy from a hard Brexit. Your response, sir?
People like Ken Clarke just need to calm down and stop their pompous posturing. We were always going to have a parliamentary break of about 5 weeks this time of year so that MPs could attend their political party conferences.
There's never been a prorogation of this length since the Civil War, sir, 1600s.
That's completely irrelevant. We were always going to have a parliamentary recess at this time for 5 weeks so that the MPs could attend their party political conferences. It happens every year. Terming it a prorogation rather than a recess has merely added 4 or 5 days to its duration.
But actually, hasn't it taken away the ability of Parliament to scrutinise, to analyse, to do its job on behalf of the people? And you talk about the prorogation as opposed to the recess as well. My understanding there were moves afoot actually to take away that 3-week recess rather than the 5-week recess you're referring to.
But to go to your key question there, no, it hasn't reduced the ability of Parliament to scrutinise any leave or leave deal or no deal, because that won't be decided by Europe until the 17th and 18th of October, when the next European Council takes place. So you can't scrutinise a deal until you know what it is, and therefore having Parliament come back about that time is the ideal time, and the Prime Minister, Boris Johnson, has already promised votes on the 21st and 22nd once the deal is known.
One would think on the surface it's hard to argue with Ken Clarke about the damage to the economy for international business trying to buy and sell, deal with customers within the European Union, not knowing what the rules will be with such a short period before Brexit on October 31st. You must have sympathy with those comments from Sir Ken Clarke.
I do have sympathy with those comments, and the logic of those comments, therefore, is to let's get some certainty as soon as possible, and that means finding out whether Boris Johnson gets a revised deal or whether we're leaving with a no deal. That's what business needs to know. Businesses will adapt, whatever the outcome.
My understanding, having just come back from Biarritz, sir, and looking at those conversations with Mr. Tusk, Frau Merkel in Berlin and Biarritz, and Monsieur Macron as well, is that the Europeans, rather than saying, no, we're intransigent, we're saying, give us some different ideas, give us some ideas you haven't said before. But the British haven't come forward with any yet, sir.
Boris Johnson's now sent his lead Brexit negotiator over to Brussels. He said he wasn't going to do that unless...
What are the new ideas, sir? Unless
and until Europe indicated it was willing to listen. The minute Europe indicated it was willing to listen, Boris sent his negotiator over. You don't conduct your negotiations in public, you do it in private.
So what do you believe then, from the outside looking in, are those new ideas that the harder Brexiteers, that those who are in favour of this prorogation, in favour of a harder Brexit, are actually coming forward and putting forward to the Europeans so that we don't have to have this hard Brexit on the 31st?
I think that nobody will erect a hard border in Northern Ireland. The Northern Ireland legislature does not want one. The Southern Ireland legislature does not want one. The European Union does not want one. The United Kingdom does not want one. So who's going to erect it? We will find the solution to the Northern Ireland backstop.
Quick final question. You're looking in as much as I am. We've looked at the various measures that Ken Clarke, Jeremy Corbyn and others, including perhaps Mr. Burker, the Speaker of the House, who himself, I should be saying, is a Conservative as well.
Well, he was
a Conservative. Yeah, they're debatable now, perhaps, as well. But the fact remains is, what do you believe their most likely course of action is next to try and thwart this?
I think there'll be parliamentary disruption, but it will lack the arithmetic to actually have teeth, because at the moment there are people who genuinely want a deal Brexit rather than to stop Brexit, and they're going to give Boris the time to negotiate a new deal and then take a view on whether it's acceptable or not.
Chris Whitehouse, real pleasure to see you. Thank goodness for once it's a sunny, warm day on our backs here. Nice to see you, sir, as well. So, ladies and gentlemen, Jeff, everybody, I hope that's given you a little bit of an insight. So Ken Clarke very firmly on one side, I'll do whatever it takes. Chris Whitehouse says they haven't got the parliamentary arithmetic to thwart what Boris Johnson is doing. I think that is the debate in a nutshell. On Squawk Box, back to you.
Thank you so much, Steve. Well, we're going to take a quick break now. Coming up on Squawk Box, gold is on pace for its best monthly gain in over 3 years. We'll discuss with Chris next.
The CNBC app has new features.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lockfine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Dad, I'm bored.
Why don't you help me water the garden?
Don't worry, this summer we've got loads of exciting activities to keep the kids entertained. How about you go explore the Rainham Marshes and play bushwalk bingo on the way?
Yay!
Look online for Asda Tour de Fun to find amazing walks here in London, from art trails to long distance. All powered by Sustrans, a registered UK charity. Go discover your fun side with Asda.
Thank you, Gold Buffs, for hanging on to the bitter end of Squawk Box this morning, because here's your chance to find out why Chris is holding on to it in his portfolio, even as we hit 1542 on the price here. Not time to cash out yet, Chris?
No, I think that actually our view on gold has become stronger. And actually what we've been doing is to move from the gold metal now into the gold producers, because I think we're now into that stage where the level of gold prices starts to make producers highly profitable, and I think the direction of gold is still heading north. So I think that that is now a more profitable way to play gold than the underlying metal, and that's a reflection of our still bullish view on them. And what's behind that is, I mean, we heard earlier about hot flows into gold, etc., and that's definitely true. I mean, we've seen flows, but we've seen those in the bond throughout the bond spectrum as well. So it's not confined to gold. The point of gold is it's not as simple as saying it's a safe haven asset. Over the long term, it has a long and stable relationship with real interest rates. So interest rates adjusted for inflation. Quite simply, when interest rates are below inflation, cash is being devalued effectively relative to inflation. And that's when gold, as the ultimate store of value, does well. It did badly all through the 80s and the 90s. Why? Because we had a new Fed regime of positive real interest rates to squeeze inflation out of the system, the era of disinflation. So that was bad for gold. This century, it's been different, and we've got a new phenomenon, which is first zero interest rate policy, and now, more recently, a return to the QE world of negative real interest rates. So we don't stay in gold all the way through. It depends on what's happening to real interest rates. We bought back into gold in the spring because we could see that actually we thought we were probably returning to real interest, negative real interest rates. I think that's become even clearer, and therefore gold is provides very good optionality and should prosper in that environment. Then we've got this even bigger story, which is where does the dollar sit as the world's reserve currency? And again, big things changing here. The Americans actually flirting with the idea of devaluing the dollar, the world's global reserve currency. The Chinese talking about this as well. That's why central banks are starting to buy gold again. That's a game changer. And I think that also underpins gold. So nothing's a one-way bet. It may be a bit overbought at the moment, but I think it's got very strong underpinnings. And as long as real interest rates, we remain in this sort of zero to negative real interest rate environment, gold should be very well underpinned.
Well, certainly appreciating that you like gold, not necessarily because it's a safe haven. I want to just dive into another asset that's come up as a potential safe haven for some investors, and that's Bitcoin. I bring it up because yesterday we saw Bitcoin drop below the 10,000 mark for the first time since July, and it's been really a guessing game as to what caused the fall. How do you think about crypto as an alternative asset class or a safe haven opportunity?
Not investable for us at this stage. Two words I used in reference to gold: long and stable. We need a data series which we can go back and explore over long periods of time. Bitcoin just has not been around long enough to understand its dynamics as an investable asset class. And as you say, yesterday, classic case in point. It moves down, nobody knows why. So we can't invest on that basis, and therefore we wouldn't go anywhere near cryptocurrencies.
Can I ask you about real assets and some of the work you've been doing in the lending markets as a way of finding alternatives to capital markets?
Absolutely. I think that it's very hard to find yield, reward for taking risk in bond markets at the moment. We've seen the risk-free rate set by the Federal Reserve and others, falling. So bond markets don't really give you that. Corporate bonds don't really give you that anymore. So you need to move slightly outside of that mainstream spectrum. Fortunately, there are ways of accessing other forms of lending strategy, particularly loans. So we like loans which are collateralized, so it's got hard asset backing. And the London market actually has been at the forefront of this. There are a number of listed vehicles. You want a closed pool of capital when you're going into loans, because you can't recall a loan overnight just because your investors are going out the door. So you need a closed pool of capital. There are a number of vehicles on the London Stock Exchange that do that. And you can see yields of more like 5, 6, 7% backed by assets. You're taking credit risk. You have to do your homework on that. Make sure you've got a good manager to manage that credit risk. We steered clear of peer-to-peer lending. Again, hadn't been around long enough. But this alternative credit, we do see value in certain areas.
Got to wrap you up. Thanks for being our guest this morning. Got to wrap you up because we need to find out what's going on in the German job market.
Well, stability seems to be the name of the game this morning. When I look at the jobless data in for Germany, the seasonally adjusted jobless rate came in at 4,000. That was in line with consensus expectations. The jobless rate unchanged at 5%.
Thank you once again to Chris Wiley, who joined us as guest host this morning. That's Squawk Box. Stay with the channel. Street signs up in just a moment.
A lot of people treat their finances like their health.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Whoa! Shell saltwater supercars. They look fun.
Science-fueled fun, actually, Dad. Toy cars that run on salt water.
Fuel the family fun with Shell saltwater supercars. Fill up with £30 or more and you'll qualify to buy a car from just $3.99.
I want one.
Okay, Dad.
Fill up on fun with saltwater supercars at Shell. Participating sites, conditions apply. See shell.co.uk/saltwater supercars for details.
Welcome to Street Signs. I'm Juliana Tattlebaum. We are live in London and in Rome. These are your headlines.
Giuseppe Conte is set to make a statement after meeting with President Mattarella, potentially putting an end to the Italian political crisis after 5-star and PD agreed to form a coalition government.
Furious outrage here in Westminster after the Prime Minister Boris Johnson makes move to suspend Parliament. Sir Ken Clarke, the father of the House, senior Conservative parliamentarian, tells CNBC that he will do whatever it takes to stop a no-deal Brexit.
Boris's absolutely outrageous sort of petty dictator stuff will bring together the rather slightly divided majority in the House of Commons, and they'll decide which of those two they're going to go for or what the combination between the two should be.
European stocks reverse early losses as China reiterates it's willing to resolve the trade war with a calm attitude. Bouygues shares jump, topping the CAC 40 as growth in the French group's telecoms and TV units helped deliver better than expected first-half profit. Well, a very warm welcome to Street Signs. There have been major political developments across Europe, in the UK and Italy. Steve is in Westminster and Jemana is in Rome. We will get out to Steve a little bit later on in the program. We're going to kick off with Jemana, who is in Italy. And just to note for you, before we head over to Rome, Giuseppe Conte is due to make a statement after meeting with President Sergio Mattarella. Conte is expected to be offered a fresh mandate as Prime Minister after the 5-star and Democratic Party agreed to form a coalition. And let's take a look at the FTSE MIB and see where things stand in terms of trading. The markets have now been open for about an hour or so, and we are seeing gains across the Italian index. It's currently up about 1.3% and green across the board for those key stocks there. The Italian banks performing well, some of the auto sector and infrastructure stocks also performing well. So a green picture overall. And as I mentioned there, we are expecting statement from Conte coming up soon, so we'll be keeping a close eye on that. But let's get straight out to Jemana, who joins us from Rome. She's been there for the last 48 hours or so now and following this marathon, which has evolved over the last day or so. But now it looks as though the coalition government is going to come to power. Give us the latest.
Indeed, Juliana, that is the case. At least investors can be happy. We've got a bit of short-term clarity that the coalition government is set to go ahead. As I just mentioned, Giuseppe Conte just met with President Mattarella. He is due to give a statement. But the next question really will be about government formation and who is going to take up key roles. So at the end is not in sight, but certainly we need a few more days to hash out some of the details and something that investors should be wary of because there are a few potential more hiccups. But I want to talk a little bit about the economy here. And with me, I've got an expert on the matter, Andrea Montagnino, the chief economist from the Confederation of Industry, or as they said in Italian, Confindustria. I've been practicing my Italian the last few days. And obviously you were an executive director at the IMF as well. This is a very interesting time for the Italian economy, not just because of the politics, but because of what's happening on the ground. And markets have indeed been encouraged by the movements we're seeing in BTPs. But let's not forget, the Italian economy is not even growing. We're growing at 0%. What does this government need to do to get growth up?
Well, first of all, the government needs to provide confidence not just to markets, but to entrepreneurs, to families, and to push investment, both the public and private investment. There is a lot of liquidity today in Italian firms at the level of 2007. So firms are ready to invest. They have the money to invest. They need confidence. They need a medium-term plan. So I think the hope today is that the government will be able to provide such medium-term horizon in order to allow firms to invest and also families to consume more.
I want to ask you about the VAT, because both parties, this seems to be one thing at least that they can agree on from the outset, which is the fact that they don't want that VAT tax hike to occur once those budget discussions start. How damaging for the Italian economy would it be if the VAT does indeed go up by 3% in January 2020?
We estimate in our research department in Confindustria a negative impact on growth of 0.3 if the VAT increases. However, it depends how you avoid increasing VAT, because if you do it in deficit and bring the deficit above 3%, beyond the 3% deficit to GDP ratio, Maastricht Treaty limits, I don't think markets will react positively. So it really depends how the government plan to do it. And I would say if there is a slight increase in the VAT, compensated, for instance, by a reduction on income taxes, maybe it can be even a good thing.
Though, of course, the citizens' income is very important for 5 Star. I just want to take it back to two of the main policy initiatives introduced by 5 Star and Lega. One was the pension reform introduced by Lega, obviously one of their key policies going into the elections last time around. And then 5 Star have been very vocal on the basic income, the citizens' basic income. What impact have those two measures had on the overall economy?
Well, the pension reform, I think, overall was a negative measure because it didn't determine a replace of workers. Because most of the new pensioner, the early pensioner, were in the public sector, doctors, teachers, and it's not easy to replace these figures. You need, a procedure. It's not like the private labor market, and also it sent a negative message that you can retire earlier even if you are in good shape. The universal income had likely and will have likely some impact on consumption, but at the same time it might make more difficult for low-income people to work. There is a disincentive to work embedded in the mechanism. So I think the new government should work on probably stop the pension reform and go back to the previous system, and at the same time to reform the universal income to create more incentive to work.
Interesting. That's something that PD have been talking about, rolling back some of the pension reforms. Final question for you. What's actually more important for the Italian economy here? Is it what happens with the politics of the short term, medium term, or what the ECB decide to do? Because they're buying up all of these BTPs, potentially introducing another round of asset purchases. And that's been a huge tailwind for where BTP yields are trading.
No, I agree with you. Italy is part of the Eurozone, is an open economy. What happens abroad is very often more important than the Italian politics. What is happening in Germany with the slowdown is extremely relevant, and the ECB is extremely important as well. The fact that the BDP, 10 years BDP today is at 1% is clearly the impact, of course, of the end of this political crisis, but also of the decision of the ECB to continue with quantitative easing.
Absolutely. We have to bear that in mind as well. All right, Juliana, I'm going to toss it back to you. That was Andrea Montanino, the chief economist from the Confederation of Industries in Italy and former executive director from the IMF.
Ishmana, thank you very much. Really appreciate your coverage from Rome. Well, let's push on to the other big political story of the day, and that, of course, is Brexit. The decision by UK Prime Minister Boris Johnson to suspend Parliament has sparked fury among many lawmakers, with some calling the move a constitutional outrage. It will now be more difficult for MPs to thwart a no-deal Brexit. Let's get straight out to Steve, who joins us from Westminster. There has been an uproar among critics for this decision from Boris Johnson, but markets are fairly muted in their reaction if you look at the sterling move. So what do you make of this decision? Is this really a game changer when it comes to the trajectory of Brexit?
Well, let's wait and see, but actually it's certainly narrowed the timeline and certainly speeded up what opponents of a hard Brexit on October 31st need to do, and the timeline they need to do it in order to thwart the Prime Minister and his supporters as well. What is interesting is some of the strongest language against the Prime Minister has come from his own party. Now, I just spoke with Sir Ken Clarke, someone who's been whispered about and potentially could become a caretaker Prime Minister in some form of coalition of interests as well, but he made some absolutely extraordinary comments, bearing in mind he's a Conservative. He's been a Conservative minister under Margaret Thatcher, under John Major, under David Cameron as well. He's the father of the House. He's been an MP since 1970. Listen to this language against his own party and against his own Prime Minister.
It's absurd. He's just given in to the fanatic element of his followers. He's decided to go hell for leather. But it's, I share all the outrage which everybody's competing to express. I hope it'll bring together the sensible majority of Parliament who will find some alternative to this, not only debating it properly, but actually saving us from just crashing out with a no-deal Brexit, which he's only pursuing because he's sold out to the people he's surrounded himself with who appear to want it.
There are many alternatives. One of them would be a caretaker government led by either Jeremy Corbyn, and your name has been mentioned, sir. Would you serve in a caretaker government led by Jeremy Corbyn?
All this stuff about who would lead what, that's all daft footnotes. I mean, the media are entertaining people with all the outrage and their personalities. The key thing is to decide, are we leaving in a sensible way that doesn't do damage to our economy and keeps all our ties with Europe, all our business ties and all our trade flowing freely, or are we going to actually have a referendum and decide whether to leave at all? You can combine the two. I think Boris's absolutely outrageous sort of petty dictator stuff will bring together the rather slightly divided majority in the House of Commons, and they'll decide which of those two they're going to go for, or what the combination between the two should be.
And so, brief, was that a no, sir? You wouldn't work in a Jeremy Corbyn caretaker government?
I would do anything necessary to stop this country creating the childishly disastrous mistake of crashing out with no deal.
Extraordinary, isn't it? I would do anything necessary, and he didn't say that he wouldn't work with Jeremy Corbyn as well. So that's absolutely fascinating for the prospect next week of a no-confidence vote in the Prime Minister and a possible caretaker government as one route that the Remainers could force forward. He wants another referendum, as you heard there, but calling his own Prime Minister a petty dictator, quite extraordinary as well. Now, later on in the show, I'll tell you what I can give you. I can give you Andrea Leadsom, who is, again, an incredibly senior politician. She's the Secretary of State for Business, Energy, Industrial Strategy. She once stood against Mrs May, of course, for the leadership of the party and the country as well. She is rebutting quite forcefully what Ken Clarke had to say. Isn't it interesting, playing out here on CNBC, not only the Brexit debate, but the civil war in the Conservative Party? We'll be back with more.
Steve, thank you so much for bringing us those incredibly bold statements. But let's just get over to Italy once more. As I mentioned, Giuseppe Conte is due to make a statement after meeting with President Sergio Mattarella. That's where we will expect him to come through any moment now, and he is expected to be offered a fresh mandate as Prime Minister after the Five-Star and Democratic Party agreed to form a coalition. So we'll be keeping an eye out for that. Now, as we head to break, here's a look at the FTSE MIB and where things stand. Positive territory for Italian stocks. Street Times will be right back.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search Combo Offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
At the Bank of Antandek, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Trees and C's apply. Trees and C's apply.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
Dad, I'm bored.
Why don't you help me hang the washing up?
Don't worry, this summer we've got loads of exciting activities to keep the kids entertained. How about you go explore the Tottenham Hale to Victoria cycle route and have a scavenger hunt on the way?
Whee!
Look online for Asda Tour de Fun to find amazing walks here in London, from lakes and logs to forests and woods, all powered by Sustrans, a registered UK charity. Go discover your fun side with Asda.
Welcome back to Street Signs. I want to bring you some live shots from Rome, from the presidential palace. That's where Giuseppe Conte is due to make a statement after meeting with President Sergio Mattarella. Conte is expected to be offered a fresh mandate as prime minister after the Five-Star and Democratic Party agreed to form a coalition. So we'll be keeping a close eye on that and bring you those shots as they come through. And let's take a look at the Italian yield curve, though. Very interesting. We're seeing the yield curve move lower across the board from the 2-year out to the 30-year. The 10-year hit a new record low this morning of 0.973%, currently at 0.989%, so below the 1% mark. So very interesting to see the Italian bond market really take these political developments in stride, despite the uncertainty that we've seen over the last couple of weeks. Let's push on to a few corporate stories I want to highlight for you this morning. Bouygues reported a 36% jump in first half current operating profit, beating expectations. Strong performance of the French company's telecoms and TV units helped offset weakness at its construction businesses. The group also backed its full-year guidance and says it expects to improve profitability in 2019. Elsewhere in the corporate space, Pernod Ricard shares have hit a record high after the announcement of a €1 billion share buyback and a 30% dividend hike in the face of pressure from activist investor Elliott Management. The world's second biggest drinks maker also outlined new investments in the U.S. and China, its biggest two markets. The company posted an 8.7% rise in full-year underlying profit, slightly ahead of expectations. And you saw there those shares are up 3.7% this morning. Elsewhere, recruiter Hayes saw full-year pre-tax profit fall as it booked a £15 million charge. The charge related to restructuring costs and pension plans. The UK company reported a 5% rise in full-year net fees, but warned of a tougher trading environment in Germany and the UK. Investors don't like what they see. That stock is down just over 3% this morning. But let's take a look at what we're seeing in wider markets. You can see there the majority of stocks trading in the green this morning. It's quite a reversal from the early moments of trade when the Stock 600 was posting losses. But those losses have since been erased, and now we're looking at gains accelerating through the course of the session. The Stock 600 is currently up about 0.7%. That reversal came on the back of some fresh comments from China's Commerce Ministry. It reiterated its willingness to resolve the trade war with a calm attitude, saying that it opposes an escalation in tensions between Washington and Beijing, and investors clearly like what they're hearing. Let's push on and have a look at the individual markets. The Italian index up about 1.4%. the political situation heading towards some sort of resolution. And of course, we're looking to hear from Conti in just a few moments. The FTSE 100 up about 0.8%. This follows some gains yesterday when the FTSE 100 outperformed as we saw a drop in sterling on the back of Brexit developments. And finally, let's take a look at sectors and see how things are looking there. One sector trading in the red this morning, real estate, just down slightly, 0.13%. At the top, we've got construction, basic resources, chemicals, and industrials. So overall, a positive morning coming together for European markets. Well, let's bring in our first guest in studio, Stephen Bell, Chief Economist at BMO GAM, to help us understand what to make of what we've seen over the last 24 hours or so. So starting with Italy, I mean, the reaction we've seen in bond markets is pretty striking. We're seeing the 10-year yield now hit a record low, below 1%. Is the development we've seen on the political front, this coalition coming together, really positive news for Italian markets?
Probably. Problem with politics, it comes good, it comes bad, you never know where you are. And we're not even having tweets involved in this Italian politics. But yes, the PD, the centre-left party, which has ruled Italy for much of recent years, is having a coalition with their arch-enemies, 5 Star, and they're going to stick by the budget rules, so they say. And the deal is we're not going to have elections, and the bond market thinks, great. And here's the yield below 1%, as you say. Isn't it amazing? I mean, we love Italian bonds in BMO Global Asset Management, but we've taken profits because we think they're just too expensive. I wonder if next week we'll be thinking, should have held on to them. But the reason that bond yields are below 1% is that you can't get a yield in the euro. You know, Greek bonds are rallying. People wouldn't want them for anything, wouldn't have given them away free a few years ago. But now the search for yield, the fact that yields are negative, so were Spanish yields. They're 0.13%. They're a tenth of what Italian. I mean, it's just a crazy bond market and the search for yield that's relentless. But yes, the politics for now looks good.
For now, and as you said, I mean, these are two parties that are effectively arch enemies in many ways, and it surprised many that to see them come together to really fight off Salvini. Is it only a matter of time before this new coalition fractures?
Well, yes. Italian governments very rarely see out their term. 5 Star, I do think you were reporting earlier, have to address their members to see if they approve it. Well, they may not. And we also have to have policies implemented by this. I mean, the reason 5 Star want to do it is, and the reason PD want to avoid elections is because they'd lose. They're not doing it for the country. They're doing it for their own political benefit. And as long as it's mutually beneficial, it'll survive. And the reason that the last coalition broke up was because the League was too popular, ironically, and they wanted the general election. That's why the others didn't, if you can understand that. So it's not incredibly stable, but it's better than general elections for people worried about before.
And in terms of what else is contributing to the demand for Italian bonds here, I mean, we've got the ECB in the background poised to announce a stimulus package in September. So how much of the reaction we're seeing in bond markets is down to the tailwind that this would provide versus the actual political situation in Rome?
Yes, that's the big tailwind. It's a tail hurricane where bond investors realize they haven't got enough. People with regulatory requirements like insurance companies or pension funds, they're behind their legal requirement, their regulatory requirement, and they're suddenly realizing there's no more debt going to be issued. And what is issued is going to be bought by the European Central Bank. You talk to the investment banks, their biggest client in bonds by a factor of 10 is the European Central Bank. They're a monopoly buying up bonds and pushing the price ever higher. Some people think this may not be good for the European economy, but the ECB believes that it works, it's going to stimulate more. Let's hope so. What they really need is fiscal policy, but that just isn't moving in the right direction at all. And the Italian government says they're not going to have the same sort of fiscal expansion that they would have had under Liga.
To your point about the warnings around more easing, I mean, just in the last 24 hours or so, we heard from Japan, policymakers there cautioning against further monetary easing. And I mean, they should know, shouldn't they? Why is Europe going to be any different from Japan when it comes to pushing for more negative rates?
Well, far be it for Japan to lecture Europe on economic policy because they're about to increase their VAT although they're trying to soften the blow with various other measures, this is a completely lunatic policy for an economy that's still suffering. The data on Japan have been weak this year. The consumer's losing a bit of confidence, and therefore they don't want a tax hike. They should postpone it again. They've done it twice before, that is, postpone it, but they're going to go ahead with it for reasons best known to themselves. So it's true. There is a problem with Japanese monetary policy because it's pushed so far that it is damaging the financial structure. The level below zero that the rates are at and the length of time it's been there is damaging. So I can understand all that. The problem is the yen's been going up because everybody else has been easing. So they're in a real dilemma.
Let's push on to Brexit. In terms of a lot of harsh critique coming from opposition leaders to Boris Johnson's plans announced yesterday. From Boris Johnson's perspective, is this really a win-win? I mean, in terms of what happens now, the timetable for MPs to pass legislation to block a New Deal has been squeezed. If they go down the vote of no confidence route, if that vote fails, Boris Johnson will, his government will have the authority to judge when to hold that election and could easily put it off till post-October 31st. So in terms of how this plays out for Boris Johnson, there's not a lot of scenarios that I can think of that really would work against him at this stage.
So a general election, which he loses, makes him, I think, the shortest, probably a counterexample, basically the shortest serving Prime Minister in living memory. So that was disappointing. But the point is, he knows a general election is going to come either way. So what he would like is to have a general election on the November the 1st, because that means the Brexit Party would support him and probably field candidates against Labour. So that's his preferred option. But of course, he doesn't necessarily have control. And although all these people are outraged at this disgraceful decision to hold the Queen's speech, which I believe after 2 years of term isn't that crazy, it's all about tactics. It's like a game of chess where each side keeps changing the rules every 5 minutes. But basically, if a national government is formed, they have the power still, despite the move yesterday, to form a national government, at which point Boris Johnson would be forced to resign after losing a vote of no confidence, and they can then ask for an extension for a referendum. That's what the Lib Dems want and the SNP want. Jeremy Corbyn doesn't want that. He really wants Brexit. He'd like an extension for just a general election. So they're all playing their own games, and seeming outraged is to some extent phony, in my opinion. For the markets, it's just collapsing the uncertainty. We're sick to death of having extensions, read this. At least with a bit of luck, it'll be resolved one way or the other, I hope, in the next few days.
I know you mentioned in Italy, when we look at the coalition that came together, that was very unlikely. Those two parties, obviously very opposing when it came to many topics. What are the chances we actually see a national unity government come together here in the UK?
I think it's a good chance. My guess about the probability of that's gone up a bit because they have no alternative. And what it will require is Conservative MPs to commit political suicide as far as their party membership is concerned, because they will be deselected. I mean, Dominic Grieve may be deselected anyway. He's one of the leading people in the Conservatives. Ken Clarke, well, he's in the twilight of his career, quite frankly, so he doesn't really care. His constituency voted Brexit, by the way. So I think there is a good chance for national government. If they can't get it together, the Remainers can't complain after Brexit. They had their chance, they fluffed it.
Well, the pressure is certainly on. Thank you very much for your thoughts this morning. Stephen Bell, Chief Economist, BMO GAM. Well, we're going to take a short break, but coming up on Street Signs, Saudi Arabia's stock exchange has completed its inclusion in the MSCI Emerging Market Index. We'll hear from the CEO of the Tadawul next.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1.
If it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
It's me, the Losers Club has officially begun.
They're back, and so is he. We didn't stop it.
The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, Because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals. On computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Welcome back to Street Signs. I'm Juliana Tattlebaum, and these are your headlines. Giuseppe Conte returns to lead Italy after President Mattarella gives him the green light to form a new coalition government between the Five Star and Democratic Party. Furious outrage after the British Prime Minister suspends Parliament. Senior Conservative lawmaker Ken Clarke tells CNBC Boris Johnson has given in to the Brexit fanatics.
Boris is absolutely outrageous, sort of petty dictator stuff, will bring together the rather slightly divided majority in the House of Commons, and they'll decide which of those two they're going to go for, or what the combination between the two should be.
European stocks reverse early losses as China reiterates it's willing to resolve the trade war with a calm attitude. Get ready for higher prices, say U.S. retailers, as the Trump administration will soon start collecting an extra 5% tariff on $125 billion worth of Chinese imports. Well, just in the last moments, we heard from the presidential office in Italy. Giuseppe Conte is now due to make a statement after being given a mandate to form a new government. And there is live shots from the presidential palace where we are expecting a statement from Giuseppe Conte returning to the helm in that prime minister post now after that coalition government has been agreed. Let's take a look at European markets. Italian stocks reacting very well to the news, up about 1.44%. So outperforming the broader European market, but gains across the board. FTSE 100, DAX, and the CAC all in positive territory. Now, bear in mind, these gains have come on the back of some comments from China's Commerce Ministry just after the markets opened, suggesting that they want to resolve the trade war with a calm attitude, and they oppose an escalation in tensions between Beijing and Washington. So overall, providing a boost to sentiment here in Europe. Let's take a look next at Forex markets. Sterling, of course, sharply in focus yesterday. We saw the British currency drop on the back of news of Boris Johnson's plan yesterday, but ultimately it closed off the lows of the day. And now this morning we're seeing some stability return to the pound. It's currently trading around 1.22 versus the dollar. The euro flat as well, and the dollar is slightly stronger versus the Japanese yen at 106. Let's take a look at European yields next. It's been an incredibly resilient run for Italian yields. The 10-year BTP below 1%. And that is after it did hit a record low earlier this morning of 0.973%. So a little bit off the absolute lows of the day, but moving lower in Italy. Otherwise, there's a slight uptick in yields for German, French, and Spanish 10-year bonds. Let's take a look at the Italian yield curve, and there you've got from the 2-year to the 30-year all lower this morning, and the 10-year, as I mentioned, below that 1% mark. Next, let's just take a little bit of a closer look at what's behind that 1.4% gain in the FTSE MIB this morning. You've got Italian banks performing very strongly on the back of this news of the coalition coming together and the reappointment of Prime Minister Giuseppe Conte. Well, let's bring in our next guest, Fraser Lundy, head of credit at Hermes Investment Management. Let's just kick off with your view on Italian banks. I read in your latest research notes that you are constructive on the national champion banks in Italy. So today's market moves, they're the right call in your view?
At least in the short term, they are, yes. And I think, although the announcement that we've just had is no real surprise at a political level, the scale of the rally that you've seen already on the Italian govies over the last few months, actually really it starts becoming self-fulfilling in the way that it helps, because at the end of the day, it is quite an indebted nation, and their ability to refinance at such low levels as they are right now, the 10-year now below 1%, is taking some of the pressure off on the immediate concerns around fiscal, which is obviously allowing the political game to move forward. I think from a banking perspective, time is king here. Theta is king. The ability for them to take more time to improve the health of their banks through non-core, non-performing loan sales and the like is what's really driving things here. And I think given some of the relief that we're seeing here in the markets, a lot of that is down to the extra runway that I think is being allowed for the banks.
And how strong is that linkage between the Italian government bond market and the Italian banking sector? Of course, this was a huge issue during the Eurozone debt crisis back in 2012, but how has it evolved since then?
I think it's still got some way to go. I mean, ultimately, it's an overly fragmented market. There's a lot of wood to chop. It's not so much unique to Italy, I would say, although you can see some of the progress that has gone already in places like Spain and Portugal. And I think, again, the amount of time now being allowed with ECB help, obviously, is hopefully going to continue to allow Italy down that same path.
All right, Fraser, stay with us. I want to get back out, though, to Jumana, who has been in Rome all morning covering these latest developments. Jumana, so Prime Minister Giuseppe Conte back at the helm. Give us the latest.
That's exactly it. So as we spoke about an hour ago, Giuseppe Conte showed up here at the presidential palace to have talks with President Mattarella, where he has now formally been given the mandate to form a government. But it doesn't end there. Remember, we've been talking the last couple of days. There are a lot of sticking points between the two sides, PD and 5-Star. Namely, originally it was about who would lead this potential coalition government. So that story, that matter, we can now put to rest. We know that it will be Giuseppe Conte leading this next coalition government. But next questions are, well, who is going to be in the actual government itself? And some of the names that are coming up here, of course, Luigi Di Maio, let's not forget, he was previously Deputy Prime Minister. What will his role be in this new coalition government? Matteo Renzi, he's not actually the leader of the PD party anymore, former Prime Minister, but still a key kingmaker and was one of the first of the PD influential figures to say, look, let's think about getting into government with 5-Star. Will he get a role? Other names that are out there, Giancarlo Padoan is a name that is being put forward potentially for the finance ministry role, as well as the Italian commissioner role at the EU. We've talked about this. Very important for PD lawmakers to try to secure that slot as well. And in terms of next steps, Conte will have a couple of days to put together a list of names. Then 5-Star and PD respectively have to approve that. 5-Star have an open direct democracy platform system called Rousseau. So they will put that membership to votes. And there's a big question here about whether or not 5-Star members in totality will actually agree with the formation of this new coalition government. A lot depends on the details of the respective posts, obviously. I also want to mention one other element that we haven't talked about enough. And if you just look at the composition of the parliament as it stands right now, the Chamber of Deputies, if you combine the number of seats of both PD and 5-Star, they've got a clear majority. In the Senate, it's razor thin. They just just about got there. And note that there have been some defections already from the Five-Star Party. So perhaps in the future, this coalition may have to rely on the support of some of the smaller parties, in Misto they call them. And that's going to be crucial as well, because some of the smaller parties here could emerge as potential kingmakers in the future. If this government wants to pass certain measures, they would obviously need the support of the parliament and some of those smaller parties as well. So yes, a lot of the uncertainty of the last few weeks has been put to bed, but as ever in Italy, it's never fully out of the woods.
Jumana, we can't forget that all of this has come on the back of Matteo Salvini's push for an election. Where does he stand in all of this now? Is he still pushing for that to happen, and how realistic is that?
So yesterday, all of the respective party leaders met with President Mattarella. They had consultations, and at the end, we heard from all of them, and they gave a speech to the press and to the public. And Salvini didn't mince his words. He said, look, at the end of the day, this is an alliance, a strange alliance with two people who in the past have been sworn enemies. It's very strange that all of a sudden Five Stars seem to change the way they think about things. Similar perspective for PD. He said, we in Lega, we will never change our minds. We're happy to be in the opposition side. And he said, look, even if it takes 3 months, 6 months, 9 months, we're sitting here and we're waiting. We're waiting in the opposition for that snap election to be called so that we will eventually get our chance to lead the Italian government again. But not so fast, because actually, since Mr. Salvini pulled the plug on the coalition a little over a week ago, Lega popularity has actually dropped a little bit in the polls. So at one point, at the peak of their success, they were polling at around 38%. They're down to around 33% now. And in exchange for that, we've seen a rise in PD popularity. They're polling at around 23%. And Five Star have also regained a little bit of momentum in the polls recently as well. So it's not so clear-cut for Mr. Salvini here, especially given that if another election were to be held, he would probably need to rely on the support of other center-right parties, Forza Italia, and obviously there's the far-right party, the Brothers of Italy. And it's unclear at this point whether if they had a snap election today, that the center-right coalition would actually succeed. So as ever, still lots of questions and not a lot of answers. But for now, what we do know is that this coalition government between PD and Five Star is going ahead.
Anna, thank you so much for such comprehensive coverage from Rome. Well, let's push on to another part of the world. Saudi Arabia's Tadawul has completed its inclusion in the MSCI Emerging Markets Index. The first phase was finished in May, pushing the index almost 20% higher. Hadley is in Riyadh with more. Hadley.
Thanks so much for that, Juliana. You're absolutely right. That second tranche, that second a part of this inclusion into the MSCI Emerging Market Index is complete. They're going to add about 2.8% to that index. And as the largest stock market in the region, there has been considerable momentum placed behind all of this movement with the FTSE and the MSCI, and all of it, of course, surrounding the bigger conversation that we've been having now for a couple of years, which is about the Aramco IPO. I had the chance to sit down in an exclusive interview with the CEO of the Tadawul, and I asked him, are you ready? Listen in.
We have worked very hard to make sure that we are an active player on the success of such IPO. As of today, we confirm our readiness to our IPO, to the IPO of Aramco, whenever that decision is made.
Any clues on when that could be?
Well, we're ready at any point of time because we have, when we talk about now Aramco or any other listings, IPO in the market, we believe now we are more ready with the inclusion process, with the access of foreign investors. That will open a new channel for financing successful IPOs in the country.
So you've got to remember, of course, that this is the biggest market in the region, and not just in the Gulf area, but also in the Middle East, North Africa region as a whole. Something about $550 billion, as well as there have been $18 billion worth of inflows, foreign investor inflows, since the start of this year. So a lot of excitement surrounding this. The volume's kind of low heading through the summer months, but certainly considerable momentum and a lot of positivity, frankly, that we're hearing, not just from government ministers, of course, no surprise there, but other investors that we've been speaking to in this very long, hot week in Riyadh, guys.
Hadley, thank you very much. Certainly a part of the world to keep a very close eye on. We're going to take a short break, but coming up on Street Signs, the Trump administration revisits a plan for ultra-long bonds. More on the proposal when we come back.
Imagine a better way to shave with no water and no nicks, bumps, or cuts.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals. On computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Strings and things. Strings and things. Strings and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
Welcome back to Street Signs. The Queen has approved Prime Minister Boris Johnson's decision to suspend Parliament in the week beginning the 9th of September. This means that pro-EU lawmakers have less time to try and thwart a no-deal Brexit. In a letter to MPs, the Prime Minister said the move was to, quote, bring forward a bold and ambitious domestic legislative agenda. Johnson denied that he intended to squeeze time for a Brexit debate.
And that is completely untrue. If you look at what we're doing, we're bringing forward a new legislative programme on crime, on hospitals, making sure that we have the education funding that we need. And there will be ample time on both sides of that crucial October the 17th summit, ample time in Parliament for MPs to debate the EU, to debate Brexit and all the other issues. Ample time.
The decision has sparked fury among Johnson's critics. Thousands of people took to the streets of London to voice their anger. Protesters shouted, "Stop the coup," as they marched towards Downing Street. Meanwhile, an online petition to stop Parliament's suspension has collected more than 1 million signatures. There's also a legal challenge in the works. Now, Steve joins us from Westminster. Steve, you've been working pretty hard over on the Green this morning, talking to some pretty influential lawmakers. What are they saying about the latest developments?
Yeah, I think it's absolutely fascinating, especially listening to the Conservatives at the moment, because, of course, we know the opposition against this. We know they have an enormous outrage against what they see as a coup against democracy, etc., etc. Parliamentary vandalism is another quote that comes up quite a bit as well. But we heard from Sir Ken Clarke earlier on as well, who, just to remind viewers, he's the father of the House. He's been an MP since 1970. He's a senior minister under Thatcher, under Major, and under Mr. The previous government as well, of course, and he basically said that he thinks this is absurd. He thinks that that Mr. Johnson sold out to fanatics. He thinks it's going to create a lot of damage for the economy, and indeed it will be the stuff of a petty dictator as well. Well, let's listen in now to the other side of the coin from the Secretary of State in the Cabinet, a former Brexiteer, somebody who's tried to be the leader twice, Andrea Leadsom, a very senior politician, Secretary of State for Business, Energy, and indeed for industrial strategy. And she rebuts what Ken Clarke had to say. Very interesting. Listen in.
It's been the longest parliamentary session in 400 years, and it's absolutely right that we use this pre-organised recess anyway, the conference recess, for the prorogation so that we can then clear the decks and get on with the next parliamentary session.
But do you think
absolutely vital.
Is it disingenuous of the Prime Minister to say this is purely about a domestic agenda, purely about crime, the NHS infrastructure? This is surely about Brexit at the moment.
There will be plenty of time when the House comes back with a new Queen's speech and a new parliamentary session to be able to debate Brexit, to be able to debate the Prime Minister's new withdrawal agreement, should he succeed in negotiating that with the EU. So no, I'm confident that this is the right thing to do.
And do you fear now that some Conservatives will now back Jeremy Corbyn as a caretaker leader of this country if there is no confidence vote?
I would doubt that. I don't think that Conservatives, or indeed many people at all, would like to see Jeremy Corbyn as a caretaker leader or any other sort of leader.
Isn't that extraordinary that Mrs. Leadsom doesn't believe that some of the Remainer Tories, now the rebels, because the rebels used to be on the hard right of Brexit, now it's the Remainers who become the rebels, now that the harder Brexiteers have the keys to number 10 as well, that she doesn't think the Conservatives will go over to support Mr. Corbyn. And yet, as I say, I just heard from one Conservative who said, I will do what it takes. And there are others, such as Dominic Grieve as well, who believe they could do the same. And don't forget, the Conservatives have got a majority of one as well. So absolutely fascinating how this goes forward next week. And one more point, of course, for the show as well. There have been so many Conservative Prime Ministers who have fallen on the sword of Europe as well. Of course, Mrs. Thatcher famously lost the leadership pretty much over Europe. Mr. Major, very similar as well. And others that I'd even forgotten the name of David Cameron, who, of course, the man who took us in to this Brexit malaise in many ways as well, in order to soothe the civil war in the Conservative Party. But it still goes on, doesn't it? So, yes, Mr. Cameron and indeed Mrs. May. Back to you.
Steve, thank you so much. Well, from one country that's facing the question of can two parties come together who are historically at odds to another, Italy. Let's listen in to Conte, who is he's speaking in Italian, so we're not going to listen in, but there's some live shots for you of him. He has just been given a mandate to form a new government, and there he is addressing the crowd at the presidential palace. He's just been given the mandate to lead that coalition, and very interesting parallels to see going on in the UK and in Italy, where we're looking to see if here in the UK opposition lawmakers will come together and form a united front against what they dislike about Boris Johnson's plan at the moment. So there's Giuseppe Conte reinstated as Prime Minister of Italy. Well, let's push on. U.S. retailers, toy makers, and tech companies are warning of price hikes as the Trump administration officially imposed its extra 5% retaliatory tariff on $125 billion worth of Chinese imports. Starting Sunday, customs and border officials will begin collecting a 15% levy on the first tranche of goods, including televisions and footwear. The collection date for the remainder of Chinese goods taxed at 15%, including mobile phones and toys, has been set for December 15th. Apple is one of the companies set to be hit the hardest by Trump's retaliatory tariffs against China. Its supply chain data shows that few U.S. companies are as dependent on China as the tech giant. Apple produces its iPhones, iPads, and Apple Watches across more than 40 Chinese factories, while almost half of its suppliers for chips, circuit boards, and glass are also China-based. Virtually all of Apple's China-made gadgets are among the goods facing a 15% tariff. Meanwhile, U.S. Treasury Secretary Steven Mnuchin says he does not intend to intervene in currency markets, quote, at this time. In an interview with Bloomberg, he also said the issuance of ultra-long government bonds is, quote, under very serious consideration. Now, let's get out to Jemana, who is in Rome, and now Giuseppe Conte just addressing the crowds. Give us the latest, Jemana.
So he has indeed started addressing the public after formally being handed the mandate by President Mattarella. As we said, a little over an hour ago, he showed up here in his motorcade to have those discussions with the president. It's been a tumultuous week for Italian politics, but finally we have a little bit of clarity about the formation of this new coalition government. Very unexpected, mostly I would say, by Mr. Salvini himself when he pulled the plug on his coalition between Lega and Five Star. He probably did not expect that 1 week later we'd be looking at a coalition government formed between the Five Star movement and PD. So very interesting turn of events here. Initially there was a little bit of resistance from PD lawmakers to selecting and appointing Conte yet again in his prime ministerial role, but they did relent in the end, and we know formally now that he is taking up the position as the Prime Minister of Italy and head of this new coalition government. He is now addressing the nation. We're going to watch out for flashes from that. But in terms of next steps, as I've said, key now is what happens with respect to that actual cabinet formation. Who is going to be a part of the government? And in the past, Conte was technically the overseer of the coalition between Lega and Five Star, wasn't really affiliated to any one party. You could argue that now he's probably a little bit more closely affiliated to Five Star, given how Five Star were pushing for him to take on this role. So it'll be interesting to see whether or not Luigi Di Maio also has a role in this next government. Remember, he was also deputy prime minister in the previous coalition government. Reports suggest that the Five Star have been pushing for him to take on deputy prime minister role yet again, but PD are resisting. And also we want to see the composition of some of the key areas. We've talked about the finance ministry. Very important point here. Will we see a continuation of Giovanni Tria, or will the likes of, say, more familiar faces like Padoan make a comeback as well? So all of these are things that Prime Minister Conte will have to think about over the next couple of days as the two parties come together and try to emerge with some form of a cross-party platform here. One final note that I'll leave you with is, if you remember, just a couple of days ago, the President of the United States, Donald Trump, tweeted that things are looking good for Giuseppe. So indeed, Donald Trump's good friend, Giuseppe Conte, has now been reestablished as the Prime Minister of Italy, and he may be with us for a little bit longer.
Jemana, thank you so much for taking us through this saga in Italy. Well, let's get back to Fraser Lundy, head of Credit Hermes Investment Management. Can't ignore the fact that just after markets opened today, yes, we've got Brexit, yes, we've got Italy in focus. We got some comments from China's Commerce Ministry suggesting that they want to approach the trade negotiations with a calm attitude. Every sector in the green in Europe, every region in the green in Europe. Is U.S. trade paramount in terms of importance relative to everything else that's going on in the world at the moment?
Well, I think it should be to some extent, because there needs to be a circuit breaker to what's going on right now in the government yield curves and the inversions that you're seeing. And it looks increasingly unlikely that's going to come from positive surprise from a macroeconomic perspective or earnings. Where it might come from is from some sort of improvement on the Chinese trade negotiations. And I think the way that the market has reacted to that news overnight tells you about how it's very important that it's going to have to come from somewhere, and maybe that's the most likely place right now.
And how do you see the Fed reacting to trade developments in the future, given the amount of controversy that's come out over the last week or so around the Fed's role relative to the political situation in Washington?
I mean, it's hugely uncertain, and a lot is now baked into the Treasury forwards curve. I think people will be looking very carefully. We've just finished an earnings season right now, but just given the amount of psychology around the inversion of curves, I would say that it's very difficult to be overly optimistic about things here. If you come at this from a chief exec's perspective, from capital allocation, anything long-term growth capex related is probably being put on the back burner.
Difficult. All right. Thank you very much, Fraser Lundy, head of Credit Hermes Investment Management. Well, that's it for Street Signs. I'm Juliana Tattlebaum. Worldwide Exchange is coming up next.
Looks like you're not sleeping well.
How did you know? If it isn't dead, if it ever comes back, we'll come back to.
On September 6th.
It's me, the Losers Club has officially begun.
They're back, and so is he.
We didn't stop it.
The clown.
Starring James McAvoy and Jessica Chastain.
For 27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime, and the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers for the heavy lifters with its payload of up to a ton, for the fuel savers with its highly efficient engines, and it delivers awards, including International Van of the Year 2019. New Combo Cargo carries British business from 168 a month with 6 years 0% APR. Vauxhall, British brand since 1903. Conditional sale, minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance, subject to status. 18 plus, small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore, and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way, and give yourself a different day at Gunwharf Quays. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports